everybody. Welcome to today's episode of ZipChat. So with that being said, I'd like to turn this over to our host, Mike Watson. He's with Accelerate. Mike, over to you. Thank you.
Yeah, thanks, Jill, for that introduction. And welcome, everyone, to ZipChat episode 18, 2022 Tech Trends. So this ZipChat is a little different than others, and we do it annually. So this is our second annual version of it, where we're going to talk about trends that we have gathered through surveying basically our ecosystem, right? So it's clients, former clients, friends, and constituents that are in our circle. We get a lot of good feedback. We process that. We turn it into a few trends that we think are really interesting to talk about, and then we bring on some panelists to talk about it. So that's where we're at. Today with me, I have Lori Myers. She's the SVP of Healthcare here at Accelerate. I also have Tim Clark, who's VP of North America Delivery, also at Accelerate. And then Jim Sloan, he's our CIO and EVP Financial Services. And both Tim and Jim are second-time Zip Chatters, so welcome back. And then last but not least, we've got Vikram Balchandra. He's our Chief Strategy Officer. Thanks for joining me today, everyone. I'm looking forward to this, and let's just see how this goes. The flow of this is going to be, we're going to wander through some trends. There's some general trends, some specific technology trends, and some maybe DevSecOps kind of trends. And then finally, we're going to do some off-survey trends that our experts here have come up with that they're monitoring through their people. So let's just get to it. I'm going to start, Tim, with you, if you're okay with that. So one of the things that came out in our survey is usability, but more than just UI UX, which we had last year in our survey, but really like people are recognizing that the users are changing. So can you tell me a little bit about your perspective on how users are changing and how we have to react to that?
Sure, thanks. That's a good question, Mike. As we look at the new generations, Gen Y, 22% of the current US population, millennials, pushing 25, 35 years of age, coming up. Technology has really changed the way that these people interact with each other and with the world. These are people who grew up with access to the internet. It was right there. They're the people that have had a cell phone in their hands since they were kids. And that interaction has driven them into, or driven us really, into a new paradigm for how those people want to interact with technology and with each other. They want to deal with that cell phone, right? They expect that bright, attractive, exciting interface that's also handheld when they're dealing with an organization they want to buy from or they want to do business with, right? They want to buy insurance on their cell phone. And that's one thing that we need to be cognizant of when we try to attract these folks as customers, is they want to interact with us in that way, and they're perfectly comfortable interacting with us in that way. They're great with text. They love to text us, right? Instead of necessarily picking up the phone to call us. Perfectly happy to do that. And the employment experience too, to attract those people, it doesn't necessarily have to fit on a cell phone. But because they're so used to these technology trends and the capabilities of these applications that are so intuitive, you have to give them an employment experience when they're working on the computer that is just as intuitive and just as attractive and very intelligent to deal with them. So as executives are prioritizing attracting and retaining these generations as customers and as employees, they need to think about those things and think about how they're going to deliver that experience through technology to get these people on board.
Yeah, great observation, Tim. Is everyone on the panel seeing that across all the different verticals that you follow?
Mike, this is Vikram here. So we are seeing this trend across verticals, and since I, in my role, see the view across all our verticals, financial services, healthcare, and insurance. So yes, there is a definite trend towards creating this experience and especially with the pandemic happening, that trend has accelerated, where the user experience has become so critical because most of the services today across these verticals are being accessed online or through the web. So that has led to this acceleration across, the focus around UI UX.
Well, I'm going to be real honest. I tend to prefer a computer over a mobile device for a lot of different functions, where I see the younger generation totally fine with mobile device form factor. So I think we're going to have to deal with these multiple generational issues for a while, but I do think moving towards a more handheld or mobile experience across the board is probably the right long-term answer. And go to our next trend, which is a question for Vikram here, actually. So efficiency is on everyone's minds these days. I think the tight labor market makes efficiency and higher productivity really important. That came up as a trend, and it kind of was clubbed together with tech debt, which is another thing that has come up as a trend last year. So I was wondering what your insights are on how that's going to affect us in 2022 and what people are thinking about towards resolving that.
Sure, thanks, Mike. Interesting question, because even compared to last year, this time especially the executives have really pointed out tech debt to be one of their key trends that they are monitoring and they are worried about, right? So what exactly are we talking about here in terms of tech debt? So in a very short view on that, Mike, what tech debt essentially is, it is the debt or the rework of what you have already built. And the reason why that comes up and that becomes such a big priority is all enterprises are looking to improve their efficiencies, right? They want to do things better, faster. And with the change in the market environment, there has been such a serious demand on launching newer products and newer applications much faster. So what businesses have tended to do, and especially more relevant in the last 2 years, is they have launched products and services in a much faster pace while cutting corners in terms of the purity of the code, the quality of the code, so on and so forth. And what that does lead to is it leads to situations where they have to go back, businesses have to go back and fix those corners which they had cut earlier. And that is where there is a serious focus on how do we kind of improve or how do we kind of manage that. A very interesting statistic that I just read through from Stripe is that globally, around $85 billion is spent just on fixing code, which has already been pre-written. Another example is a lot of retail businesses which were offering online e-commerce as a solution or as a service just because it was there, suddenly got in a situation where their entire business moved online. And those applications, businesses, infrastructures were not ready. So they had to push code or create applications, create businesses within that short time frame just to survive. And to do that, they had to go through this entire process of launching products much faster without, kind of going through the rigor of checking the code, going through the DevOps process, so on and so forth. And that has led to a serious amount of rework, which is now being addressed by IT executives. And that has become a big issue today. So that's the way I see it. That is why you will keep seeing this come out as a big issue across industries, across companies, where people are trying to deal with what they've already written earlier.
Yeah, that makes sense. And, it does seem like with, the need to staff and, with retention issues and all of that, everyone's getting constrained in all aspects, right? Like whether it be product management, whether it be development, whether it be architecture, QA, delivery, or DevOps, et cetera. So I could see how people have to cut. Out of necessity, you have to start making these corner cutting or pushing people to work, longer hours, which makes them more likely to make mistakes and things like that. So it totally makes sense. So what can we do about it? Like, how do you fix technical debt? And this is an age-old question, so I don't expect you to crack the nut here, but like what's trending towards solutions to fixing that, do you think?
So 2-3 things are, and since this has become such a big topic and has been in discussion across different IT forums and the leadership levels. So first, I think, is to assess itself, right? How do you assess what is your IT debt? So there are tools, there are ways in which first the step one to really address it to first assess what is the size of my IT debt, right? So that becomes step one, documentation. And suddenly documentation has got so much more value, because unless you document what you have already written, it becomes more difficult to figure out a fix for that. So assessment, identifying what your technical debt really is, that is step one, right? And then what is the business impact of that technical debt? So for example, if I have to refactor and write the code all over again, is that going to have a serious business impact? What is the ROI on that? So once you identify what your technical debt is, the next step is the strategies. And fortunately for us today, there are a lot of ways in which companies are dealing with it, and there are tools available to deal with it today. I think the first one, which we have seen for many years, is to have a partner or get your development process in with DevOps best practices, right? Figure out how you can work with a partner who can provide you with that. And then we are fortunate that over the last few years we have these low-code platforms which have provided the infrastructure and the tools, which is where it becomes very easy. They have engines where you can kind of create strategies to address your tech debt. So low-code tools like Appian have this built-in engines where you can use them, because they create code which is already written with all the standards and specific details, right? Then a big part of handling this is also around automation of your QA, because that again helps in handling some of your technical debt which you have. So these are kind of these time tested strategies to handle some of the technical debt which companies have seen, and lot of energy, lot of effort and investment is happening in these areas.
Yeah, so just to summarize, you're saying improve your ability to deploy quickly and accurately, and then improve your ability to verify that your code is working quickly and accurately. Yeah, that totally makes sense to me.
And going back to your point lastly, Mike, on talent is in shortage, and we all know that. So how do you kind of automate, how do you kind of document so that even when you do have churn in your teams, you are able to manage the technical debt in a much better fashion? So documentation also becomes that much important in this process.
Yeah, good point. Good point. All right, thanks for that, Vikram. Let's go on to the next trend. So Lori, I'm going to pull you into this one.
Okay.
So I think there's a similar challenge across productivity and also employee satisfaction, just in usability of apps or ability to do your job, right? Like tooling and all of that. So, and then efficiency, is of high concern. If you have less people, those people have to do more, and working longer hours, we already talked about, isn't the right answer. So what are your thoughts on how to deal with that? I know the trend here is intelligent automation, but can you tell us more about that and why it's so hot right now?
Absolutely. So thank you for the introduction, Mike. To kind of spring off some of the topics that Vikram had just covered regarding technology or technical debt, is there is a plethora of technologies that are available that deliver value to an organization. And they're often challenged with leveraging the right technology in the right way at the right time to maximize their return on investment. Many organizations are investing in incremental pieces of technology and automation, and the intelligent automation is a fusion of three technologies whose integration together creates a solution that powers business transformation. It's very purpose-built and is particularly impactful across the healthcare ecosystem. And it helps to drive productivity as well as cost of care reductions and operational efficiencies, which are front in mind with the health tech sector. So information or intelligent automation is again built on utilizing three different technology components. The most critical component is artificial intelligence. Basically, artificial intelligence is used by enterprises to transform raw data into actionable insight, or in other words, turning the data into information for decision making. Currently, 80% of the existing healthcare data remains unstructured. I have to admit to being surprised that in this day and age, that percentage was so high. I would have thought and hoped that we were having a much more impactful percentage in being able to turn this valuable resource into usable information. But 80% of the data is either ignored, unsaved, or abandoned completely, which is adversely impacting our decision making and analytics, and that includes safety decisions, health outcomes, clinical care management, reimbursement, those types of things. So it's artificial intelligence is going to play a very huge impact in being able to improve the performance and productivity of these organizations. Combining that technology with business process management, or what I like to call business workflow automation, is going to help us as we work horizontally across an organization, addressing comprehensive end-to-end workflows. So we can identify waste, unnecessary steps or actions, and identify gaps that we can remediate. So, because there's a lot of passing of data back and forth between organizations, and even within a single organization between departments and silos. So looking to do those efficiencies horizontally across any one organization or any organization such as a health insurer, interfacing with healthcare providers so that we have better exchange of data so we can make more timely decisions will improve productivity for all of us. The third component is robotic process automation. I know a lot of organizations are really hot into creating bots to address high volume, low value repeatable tasks within a process. And that is great, good, and wonderful. And it really needs to be incorporated into workflow management as well as artificial intelligence. Our intelligent automation actually accelerates the capabilities of business process automation, robotics process automation, and artificial intelligence. It's the integration of these three components that really maximizes the return on investment to organizations investing in it. Intelligent automation kind of validates the old quote that the whole is greater than the sum of the parts. And I can give you an example, just thinking about prior authorizations that are required by both the payer and the providers, of how intelligent automation with the processes and the exchange of data actually more efficient, reduce costs, improve productivity, and deliver better health economics and health analytics for both organizations to deliver value to the entire healthcare ecosystem.
Yeah, thanks for that, Lori. A lot to unpack in there.
Yes, it's a big topic.
One of the things I was thinking about is last year, I believe RPA was on our trend list. I don't know if it made the top 10, but it was in the top 15 for sure. And yes, it sounds like everyone's evolving from like, not only do we need this RPA concept, but we need a bigger concept of, this intelligent automation across a bigger set of things, right? Not just repetitive tasks, but how do we integrate that into decision-making workflows and things like that? And I would assume, and I'm going to pull in Tim, I'm assume in insurance tech, this is also a common theme as well, right?
Yeah, insurance tech it is, and I think across the board. I would expect that even in fintech it is. Everyone is facing similar problems, right? And the technology is enabling more creative solutions. So just like we can use AI and ML and RPA and sort of marry those up with the people that need to be in the process for the people important parts in healthcare, that applies equally well to a P&C or a life insurer or a financial services organization, wealth management, that sort of stuff. I would expect Jim has some insight there too, especially in how that might impact those sort of organizations.
Yeah,
Yeah,
Jim,
I mean,
anything you want to add on
yeah,
this stuff?
sure. I mean, clearly RPA, AI, ML, and being able to draw insights from data is going to be important, to fintech going forward, banking and financial services industries. I think out of the and the three will continue to come together as Lori explained in IA, intelligent automation. But I think that we're going to see a significant increase in just AI, ML, artificial intelligence and machine learning across financial services companies. Financial services really one of the early adopters, Mike, as you know. So they're going to continue to leverage AI, ML, in areas of task automation and risk assessment and fraud protection. I think the challenge is going to be to introduce AI, ML into like the sort of a less predictive task, if you will. Tasks like sales and customized services, and certainly wealth management decision processing. I think portfolio management and risk analytics are really, really good examples of this, where advisors are turning to AI, ML really to assist in making investment decisions and to optimize portfolio holdings. Like instead of relying on the more traditional optimization techniques like, say Monte Carlo optimization or other statistical sampling methods. Advisors are going to need to expose areas of an investment risk that might be hidden deep within data. So those hidden data points are not easy to detect really, right? By traditional means, when dealing with very, very large amounts of data, particularly portfolio data. There was a Forbes article I was reading from earlier this month, that where the IDC is predicting that the financial services industry is going to be second only to retail in terms of spending on AI, and that's between 2021 and 2025. So almost 15% of the spending that financial services companies will do between that 4-year period, and it's about 15% of $200 billion. It's financial services is going to spend that on AI. So it's clear that IA, RPA, AI, ML in particular, at least for financial services, is going to be trending. It's going to continue to trend in 2022. One other area, Mike, if you will, in terms of AI and innovation, would be to ensure fair and equitable treatment of credit applications, right? So AI is going to be leveraged to increase the efficiency of algorithms in identifying bias in the decision-making process. Really what the end goal is ensuring that all segments of our population have fair access to lending and business funding opportunities.
Yeah, that would be that sounds like a great initiative. Fairness and removing bias, I think that's a great thing to try to do across things. Although I'm sure AI gets its own bias, but it's based on different factors. They
have to be taught though, right? Mike, they have to be taught to have that bias, right? So
yeah, I guess so. Yeah, interesting. Yeah, so we moved from intelligent automation into AI ML specifically, and that is on its own trend. It's very interesting. It's also interesting how it's evolving. Like it was a trend last year, but last year was more about like we need to do more of the basic stuff, right? But it's again like RPA has moved up a level where it's like how do we get into more advanced decision making and really tie into that automation type of thing where make people's lives easier, have people do less analysis and more decision making about whether the analysis is accurate or not, that kind of thing. So great trend. So I want to move on to one other technology, unless someone has something to add. Lori, did you want to add something?
If I could, certainly within healthcare, again, turning in and managing, making sense of the huge amount of messy, unstructured data, AI has proven to be very, important in that we're using natural language processing, OCR, computer vision, deep learning, machine language to actually classify, categorize, and extract relevant data that we can bring into the processes. And through this intelligent document processing, we can now get data from X-rays, CT scans, MRIs, lab results, handwritten clinical notes, PDFs, emails, faxes, any kinds of ways. And we're using AI to convert this unstructured data into structured, usable data, which we hadn't been able to do before, which is helping to drive better clinical outcomes and safety concerns, as well as reduce cost. So it's hugely impactful.
Yeah, nice. Yeah, I can see that, definitely. So let's move off that topic because we have quite a few more to go. So Jim, I'm going to ask you about probably what would be considered a speculative technology to some, and that's blockchain, right? So a lot of people see it as cryptocurrency, and cryptocurrency, I think, is the sexy outside view of what blockchain is all about, but there's a lot more to it behind the scenes, and there's a lot of applications that have nothing to do with currency. So can you talk a little bit about that and why it's trending?
Yeah, sure, Mike. I guess it's important to note that there can be, as you kind of pointed out, a lot of hype, right, around, blockchain, particularly as it relates to cryptocurrency. And so sometimes it's a little difficult to kind of separate the hype from what's really happening. But I think you kind of hit the nail on the head, right? It's really not just about cryptocurrency, right? Blockchain technology itself, or distributed ledger technology, is going to continue to disrupt industries, and particularly financial services industries, which really have more broadly been, traditionally been centralized, right, and governed by, banks themselves and governmental regulators. Just a reminder, I mean, to the audience that, the primary attributes of blockchain technology are that it's distributed, it's encrypted, and it's governed by consensus, right? So, which makes it a very, very applicable technology to really improve the operating efficiency of any type of contract. We've heard of smart contracts. So any type of situation where you have a contract that's changing hands, to make that, to be able to govern that by consensus and to encrypt those transactions is certainly a desirable thing in general. But besides the disruptiveness of this technology, it promises, really, blockchain technology promises to really deliver clear benefits, right? Streamlining infrastructure, increasing security, reducing fraud would be another big thing. Fostering transparency, we mentioned that, and then of course increasing the processing speeds of transactions, things like settling and clearing funds. So banks and financial services companies have been piloting blockchain projects for quite some time now. And some have even really put it to more general use, right, outside of cryptocurrencies per se. Again, referencing that Forbes article I mentioned a little earlier, Forbes cites, a couple, adopters, of blockchain in the area of foreign exchange rates and trading, foreign exchange rates. So HSBC, and Wells Fargo are examples that Forbes cites. That article also cites MasterCard, PayPal, and even JP Morgan are allowing payments now to be made through cryptocurrency across their networks. And JP Morgan even came out with their own cryptocurrency. In terms of insurance companies, Tim's probably aware of this, but AXA has created its own blockchain platform that really automate the process of paying out customers whose flights are delayed. So we're starting to see hype change to reality, and the adoption of distributed ledger technology, not just in cryptocurrencies, but in these other more traditional banking financial services, and it's going to continue to be transformative, Mike. It's well beyond cryptocurrencies and digital money. We're going to see blockchain and distributed technology, just continue to make waves in 2022 through all types of banking and financial services.
So I'm going to ask a health tech question related to this blockchain concept. But I just had this idea in my mind, believe it or not, just now, of doesn't this help us with universal healthcare records? Data ownership is a huge problem. I hate filling out the same forms at every doctor's office.
Yes.
Can we solve that, please, with a blockchain or something?
Yeah, so blockchain is being considered to support what is called interoperability, and the or the portability of health data or health medical records information across provider organizations. That is part of the Office of National Committee for Health Technology that's looking for building out the blockchain to support that. It's still kind of early in people jumping onto the blockchain kind of bandwagon.
That's a huge problem to try to solve. So I imagine there's a lot of positioning and things going on. But yeah, it would be nice. I just could imagine a solution with a blockchain that might actually work quite nicely for everybody.
Yes, and we have a particular client that has been working a great deal with blockchain. I don't really have a current status of where they're going with that, but it's a matter of getting buy-in from across the ecosystem for providers, different large health systems, as well as the health insurance payers. So everybody's got to come to the party with their own buy-in and requirements for supporting blockchain.
And it's such a huge set of constituents that it'll be a big problem to solve, but it would be great if we could solve it. I think it would help us a lot. Okay, so let's move off of that topic. Thanks, Lori and Jim, for giving some insight there. Let's go into my DevSecOps sort of section. So I'm going to bring Vikram back in and ask him about the trend of cybersecurity and where that may be going in 2022. I know there's been a lot of high-profile ransomware attacks this year, and before that there were data breaches, and there's always data breaches, I think, but there were higher profiles in the past. So what are we doing? What is the trend in 2022 about this?
Sure, and thanks for pointing that out, Mike, because this has always remained a high in terms of priority investments. But the one incident that I wanted to point out is where 30% of the country got impacted because of the ransomware attack on the Colonial Pipeline, right? So this is getting as real as it can be, where people were not able to get gas for such a long duration because of a cyber attack. So what has really happened in the last few years is the overall change in the way cybersecurity is being approached, right? The whole IT infrastructure has moved from being primarily on a client server basis to being in a multi-cloud environment today. And again, last 2-3 years have accelerated this process, right? So with the rapid scale of the cloud environments and the use of third-party software across the enterprise, right? Every enterprise, big, small, is using multiple third-party software where the vulnerabilities are not even known today. So if I'm using 20 or 30 different third-party software components or softwares or applications, that each of them have their own vulnerabilities. So I think the step one, which is now the trend and where companies and solutions are moving towards, is first to do the assessment itself. Can you scan and can you first figure out in your IT enterprise environment, where is the vulnerability? What is the vulnerability? And this goes beyond just doing the vulnerability checks either on a certain application or on your infrastructure. It has to be done across all. So it has to be done across your infrastructure, across your cloud, across your multi-cloud, across your data, and across your different application components. So the step one is to understand those vulnerabilities. So luckily, over the last few years, there have been tools and solutions which have come up which can do this now. which can do assessment of your security risks, identify those vulnerabilities across your entire IT environment, right? So step one is the assessment. Second step is the remediation. So now you know, now the vulnerabilities could be on the application side, it could be on the infrastructure side, and especially with the advent of the volume of data, which is now sitting on the cloud in your existing data centers, in your existing environments, and which is in movement, right? So once you identify those vulnerabilities, how do you fix them? What is the remediation on each of those vulnerabilities? So that is where the trend in cybersecurity is moving to. So even Gartner talks about different levels of cybersecurity or security threat assessments and fixes. But a lot of newer age products and solutions are really coming with a comprehensive approach where they can come in and do an assessment not only of your infrastructure but all the components that cause these vulnerabilities. So that is the trend where cybersecurity is moving towards. And one is just the assessment and fix. The last component, Mike, there is how do you do it on an ongoing basis? Because the threats keep changing. The bad actors keep evolving. They are also getting better in terms of creating those vulnerabilities or exploiting those vulnerabilities. Even large companies like Facebook, and we all know that, right? 500 million data points got exposed on Facebook. So those are the areas where there has to be an ongoing surveillance, where the products need to evolve. And then the last part is the compliance, because that is also, especially with healthcare and financial services and insurance, compliance is again a big issue that needs to be dealt with. So that in a nutshell is where cybersecurity is headed towards.
All right, thanks, Vikram. Anyone have anything to add to that?
Just one thing, Mike, just real quick. I mean, as CIO of Accelerate, I kind of in a unique position where I can see clients, prospects, when we get to participate in an RFP, like this is an important topic to companies, right? So we're constantly getting questionnaires, right, around our cybersecurity policies, and the importance of our certifications, whether it be 27001 or SOC certification. This is an important topic to companies, big and small. And frankly, companies don't want to even do business with a services provider unless they're taking this very, very seriously. And fortunately at Accelerate we are, and we're even offering some of these vulnerability scanning services, as an outbound service to clientele as well. Some of those services that Vikram was just talking about. So, even some of our clients are now hiring, CISOs, right? So companies are taking this so seriously as to, invest more even at the C level in information security itself. So very, very important topic, and it's going to continue to trend in 2022.
One last point to add, Mike, to that is, while we all hear of these big breaks and the big impact, every small enterprise or business is now under threat. And unfortunately, the level of expertise available in the industry is not adequate to handle every small business, right? So that's why it becomes important to have these security tools and products and solutions which are very easy to deploy and easy to use by the existing IT teams. So that also is a trend that we are seeing more and more. They have to be easy to deploy, they have to be quick to deploy, and easy to use with minimal training to the existing teams. Because there just isn't enough expertise across the enterprises to deal with these kind of threats today.
Yeah, thanks, Vikram. It is a very serious and important topic, and even the smallest startup who launches their first server really should be thinking about it. I mean, the threat is that real.
Yeah.
So one last trend coming from our survey before we get to some other industry-specific trends. This one I'm going to ask Tim to talk about, and it's about essentially digital transformation, and maybe there's something similar to what's happened with agile transformations where there's some fatigue setting in. So talk a little bit about digital transformation, why it's a trend, and maybe a little bit about this fatigue that might be setting in.
Well, digital transformation isn't new. We've been doing some form or other of this since computers were invented. A long time ago, back before our career started. But we hear a lot about these digital transformation efforts failing, not producing the results they want, leaving the technical debt that we spoke about earlier in this project. And in fact, the Standards Group did a survey in 2020 estimating that about 66% of software projects fail. There's a lot of failure in digital transformation. And that's causing the leaders in these organizations to hesitate maybe a little bit, or take a little bit more cautious stance on what they're doing next for their digital transformations. And they can't avoid it. We can't avoid it. If you don't continue to move forward with these initiatives like the intelligent automation Larry was talking about, or thinking about blockchain, these new technology trends, you're going to get left behind in the dust, and your company will eventually fail you. So you have to stay on top of the technology. You have to keep doing it. So what we're seeing is that enterprises are a lot more cautious, a lot more careful, a lot more thorough about how they're analyzing everything about these digital transformation projects. They want to understand exactly what they're going to do, the benefit they're going to get out of it in a clear, measurable way, and evaluate the partners that they're going to partner with just as stringently to make sure that they're doing this with the right people and the right technology. So it's, I guess it's once or twice bitten, thrice shy, to add that caution into the mix of how organizations are moving forward with their digital initiatives.
Great. Yeah. So is everyone seeing that sort of common trend? I assume all of our people we talk to are sort of looking at it with a slightly different view. Like, we can't just lift and shift to the cloud. That may not be the best solution. We might have to think it through a little bit more than that. Is that a common theme?
Yeah, from our perspective, in the organizations that we're dealing with, there's definitely an interest in going to the cloud and going to low code and using smarter tools, but there's a lot more scrutiny involved in the process. It takes a lot longer to get through it, and a lot more work to understand what it is that we're actually going to deliver and the benefits that we'll see at the end of it.
Awesome. Thanks, Tim. So let's go into a few bonus topics. So I'm going to start with Lori. So what is your top trend that you're seeing in health tech outside of what we've already discussed?
Yes, so I'm really seeing that there's going to be a big emphasis in 2022 and 2023 on telehealth. It's an important strategy for providers, hospitals, and large health systems to reach patients outside of their four walls. Now, telehealth is not a replacement to in-person care, but as we realized with COVID, it's taken on a life force of its own. And so the objective is really to achieve a balance between telehealth and in-person care as a way to make care delivery more accessible and efficient, overall improving health outcomes for our patients, for the patients. So organizations are investing a lot in developing telehealth offerings to actually achieve those goals, as well as improve patient engagement. Another thing that we found during COVID was a lot of people were just not getting care because they just didn't have access. And telehealth is more than just having a Zoom meeting or those types of things. So part of telehealth is leveraging technology for patient monitoring as well as care management and intervention. So what we're seeing is being able to get integrated devices and new generation wearable technologies in the hands of patients, being able to secure the data through detectors and sensors, using smart technology and AI to send this information, send alerts over to professionals, clinicians, so that they can detect an incident and then proceed to do some education and intervention in real-time monitoring. So I see that there's a lot of different components here, but it's basically looking to really increase the footprint of what telehealth is and leveraging technology for, patient care management and monitoring.
Yeah, there was a customer in my umbrella that had a dental device that they could monitor to see if you were using. It was for orthodontists, because apparently it's a fixed bid, right, with orthodontists. So they want to make that process as quick as possible, and so they would monitor their patients and nudge them to continue to use the device to speed up their time to get the corrective actions taking place. So I think taking that kind of concept where you're, like you say, collecting data and then sending alerts and doing whatever you need to do,
Right.
It just seems like more and more of that makes sense.
Yeah, other examples, very similar, as you've seen them on TV, is people that have the blood glucose sensor and being able to take their measurements and send that into their physicians real time to say what their blood glucose level is and whether or not they need to change their diet, they need to have a dietary consult, or if they need to be on diabetic medication or some kind of change in treatment plan or examples.
Makes sense. Yeah, any way that you can get that data, because that's really the challenge, is you can do a lot of the physical checkup, maybe visually or whatever, but like you can't replace blood work, for instance. And everyone can't have a lab in their house, so like that doesn't make any sense either. So interesting. Thanks for that, Lori. So Jim, why don't you go next? What's your number one thing outside of what we already discussed?
Yeah, sure. And it's a hard to pick, right? We talked about AI, ML, blockchain, cybersecurity, cloud migration. All these are important topics within fintech. But if I had to pick one thing, Mike, it would probably be digital banking, and that's sort of really composed of two components, right? Mobile banking and API-based financial services. And mobile banking sort of is kind of harkening back to what Tim said earlier at the top of the call. About Gen Z, right? And everyone's got a mobile phone, and some of us have a proclivity towards mobile phone, others laptops. But the reality is we've got about 8 billion people in the world, right? 2 billion of those people are still unbanked. They're the unbanked citizens of the world. So if you're a financial services or bank, you want to find out some way of reaching those unbanked, that population, a quarter of the world's population, right? That need banking services. Well, guess what? Almost 70% of those 2 billion people have mobile phones.
Mm-hmm. Yeah.
Right. So, that's going to be a key target. That population is going to be a key target for banks and other financial services providers. And certainly if you're not going to have, I know this is true for myself when I'm shopping around for a new mortgage rate or want to open a new account, if you don't have a mobile app for me to download, like you're going to lose my business. And so certainly you're going to lose business to your competition if you're not providing mobile banking services. Reasons, the banks and financial service firms might really want to include, mobile services would include, just improved customer experience, right? Sort of that ubiquitous access that you have to your banking and other financial services. Certainly, you're going to reduce costs if you're a bank, and we're probably, we're seeing this even today, right? Look around as you're driving around. There's less brick and mortar branches out there, right? So much can be done virtually, and so much can be done on your mobile device. One of the key, drivers, I think, for banks and financial services firms to really, make this almost their number one is that continual customer connection, right? So you're going to be able to capture lifestyle and behavioral data, right, in order to offer bespoke products and services, right, as well as biometric security measures to help stop fraud. There's a lot you can do, over the mobile phone today. So we're going to see banks, insurance companies, financial services firms just increasingly deploy chatbots, cardless banking solutions. Like when you go up to your ATM, you're not going to have to pull out your debit card anymore. You can pull out your mobile phone and withdraw money, using your phone instead of a traditional bank card. And obviously personal communications over mobile phones as well. So that's the one prong of the digital banking, mobile banking. The other is API-based financial services. Just as a reminder, an API is an application programming interface, right? It's essentially it's a term used in software to really exchange data across application boundaries, right? Usually with more, two or more programs exchanging data. So, these types of APIs are going to be used increasingly to access banking services, products, to offer, to offer new services. And in fact, they've really become the de facto way to exchange information between banks now. Obviously, APIs, programmers and developers. I mean, Tim knows this well. It improves so much operating efficiency to be able to use an API, reduce costs, enhance security using an API, but they're also going to be a way to provide niche services, right? So a company, for example, not too long ago, Accelerate, built out an MVP for a client that wanted to build a debt consolidation solution, right? And so now you need to access, the credit scores through credit bureaus like TransUnion or Equifax. You need to maybe access an API through Plaid, right, to get to the underlying financial, banks and where their funds are held. And you kind of want to pull together these things, right? Check a credit score, offer a loan or offer a suggested payment plan, and then actually set up those payment plans and pull the money from an account. You used to have to go to 6 different places to get all this information, by traditional means. Now it's all available through APIs, like the solution we built for our client that used probably 10 different APIs, including DocuSign, and other APIs to, fill out disclosures, right? So it's all coming together behind the scenes to offer sort of these super apps that, that offer these niche services. And so we're going to see more solutions, banking as a service and other core banking services, offered by fintech organizations and challenger banks to your tradition, banks to challenge, your traditional banking, big banks and brick and mortar banks. So API driven financial services combined with the mobile application delivery, would sort of encompass digital banking, and that's where I think we're going to see, an increased amount and a tremendous amount of growth in 2022.
Yeah, thanks for that, Jim. That's very interesting. Like that aggregation of services in a powerful way. I mean, it almost fits into the theme of intelligent automation, but like for a consumer, right? As opposed to maybe for your internal processes.
Yeah, good point. Yeah.
Yeah, so we have a few minutes left. And so, Tim, I'm going to let you give us your one InsurTech related item that we haven't discussed yet.
Sorry about that. There seems to be a shift in the way that folks are buying insurance. So traditionally, and up until a few years ago, we would go apply for insurance, whether it's for our car, our home, ourselves, for health insurance. That would be underwritten, and we'd sort of get a price for that, and we'd have a lump sum payment, or every 6 months you pay on your car insurance or whatever. But that's shifting with technology and with consumer preference, especially this younger generation that we talked about earlier coming up, to more of a subscription model. And when we talk about a subscription model, it really is just like sort of like a streaming service, right? Where you're subscribing month to month to insure whatever it is that you're insuring. And once you have that sort of month to month thing going on with your insurer, you start thinking about the ability to maybe turn on or turn off coverage. For example, now that we're mostly working remote, my car's in my garage almost every day instead of being driven every day. So maybe I can turn on collision coverage on days that I want to drive it and pay a little more today and then turn it back off and save myself a little bit of money and also save the insurance company from taking that risk. We're also seeing the ability to have sort of predefined packages tied to life events. Something not as simple as I want to drive my car today, but I'm buying a home or I'm having a child. And maybe there's a package that I now want to pull into my subscription to add coverage for that, whether it's health insurance for the child, life insurance to cover me, to cover the debt with a new home, and so forth. So, as we're seeing these models, it's got the intelligent ability to flex the rates, along with the risk that these organizations are taking on. Throughout the insureds, though, the risk is still pooled around all of the insured, but the distribution of that risk can vary a little bit. It's an interesting challenge to solve how to determine those premiums sort of on the fly as the people want to add risk onto their policies temporarily. And this is a way that some of the smaller, I guess I'd want to call them upstart insurers, are doing business. And it's gaining them customers, and the older, more established insurers are starting to take notice and starting to look at that as a way that they need to continue to compete with them as well. And this can bring in all sorts of other, interesting technology, like IoT stuff, GPS, telematics for the cars to know when you're really on the road or you're off, artificial intelligence to understand how to affect the premiums when you're subscribing for new things for a short amount of time, and that sort of thing. But it's an interesting new model.
Yeah, I think the convergence with mobile technology and the ability for someone to flip a switch on their phone to change their coverage, I think makes it so that this is like realistic, right? Like if you had to do something complicated to get a change, like call somebody and they have to do something behind the scenes, like it just doesn't seem like these kinds of options are available. So the ability to quickly make those changes and to do them in a way that is secure and makes sense, I think it does open up those windows. That makes sense to me. Awesome. Thanks, Tim. So that's what we had for today. We don't really have a lot of time for questions. We just have really 3 minutes left in our schedule. So we'll probably just wrap it up here. I want to thank everyone in the audience for joining us. The audience is very important, and we value you and we appreciate you. This is why we do this. But also I want to thank all the panelists. I know it takes some time to get on here, not just for the session, but all the prep that I make you do. And I appreciate all of you helping us out here. I felt like this was really great ZipChat today. Thanks for that.
Yeah, thanks for hosting, Mike.
Thank you.
Yeah, thanks, Mike.
Yes, thank you for all your hard work.